All right. How's it going, everybody? It's Nathan Payne here at the Payneless Wholesaling Podcast. I got my awesome guest on here, Chris Miles. What's up, Chris?
Hey, what's up, Nathan?
Oh, it has been a good day. It's been interesting. I mean, got a lot done today. How about you? Have you had a busy day?
Not too bad. Like we just had our whole team flew in, so I just got them out. I did wake up at like 6 a.m. or whatever to get them to the airport early, but no, it's been a great day. It's been good to catch up and just excited to teach. You're like the third interview I've done today.
Oh my gosh! Wow. So you've been on 3 podcasts or 2 podcasts so far? Today?
Yeah, exactly.
You're busy. You're a busy guy. That's awesome. Hey, and by the way, I love the studio. I know if people are watching this or listening to this on podcast, you can't see the studio, but it's a nice studio. I know that's dope.
Yeah, it's amazing what you can do out of your home nowadays, right?
I know, it's crazy. I would assume that you're at a high rise right now or something.
I'm too damn cheap for that. So
hey, I feel you got to save where you can. So hey, everybody, I got Chris on here. We've networked through being in a couple. I think we're in a mastermind, the family, right? We're in the family together.
That's
right. I went on his podcast a little bit ago. Chris, there's a lot to learn from Chris. So Chris, I know for people who don't know you, I mean, can you give us like a minute intro just to who you are and what you do?
Yeah, besides the fact that I'm a father of 8, with blended family, my wife has 2, I have 6. So we have this massive Brady bunch of kids.
Wow.
And you just happen to get me during the quiet point when nobody's around, right? So don't be surprised to hear some yelling at some point. But living here in Utah, just loving life out here. And the thing is, I mean, what I do now is I really am kind of financially independent for the second time. Right. So I became financially independent when the first time I was 28. I had enough passive income where I could stop working actively, but I just get bored. I got beat up by the recession in 2008. So I learned a lot from that after going over $1 million in debt after becoming a millionaire. And then I had to dig out of that hole, work my way back, and became, financially independent the second time back in 2016. So basically became financially independent twice by the time I'm 39, not because I'm awesome, just because I screwed up and I had to do it a second time just to do it right.
Dude, that is honestly amazing. So let me ask you a question about getting out of that debt, right? Like, did you have to make another $1 million and pay it all off to get out of that? Or was there a strategy to get out of that debt?
There was definitely a strategy. I mean, part of it is I had to sell assets, right? Even if it meant I sell off everything I owned just to try to get some cash to help pay some of those things off. I did some negotiating. I learned that reading one of Donald Trump's books. Like he had done the same thing. I mean, he had 900 million of debt. I only had about 1.1. So it was a little bit easier for me than him, but I did negotiate some things, try to get it down. Like even with creditors, like Mercedes I had to turn in after the recession, right? It was 31,000, I think I owed after they auctioned it off. And we were able to negotiate it down to like $7,500. Something like
Get
that.
out. You're seriously, you're able to negotiate it down from 31 to 7,500?
Oh yeah. Well, yeah. I mean, think about it. Banks as well as credit card companies. They're just like every other investor. If they know that there's a possibility they may never get paid, they'll take just about anything. I mean, I had a credit card actually that I didn't have to pay on, but my wife's like, "Come on, Chris," because it had been over 10 years. It was an American Express. I got through Costco, right? And I had like over $30,000 on that one, and it went past this, the 7-8 year mark, and so they really couldn't collect anything on me. But I said, "Hey, listen, guys, I know you can't collect anything, but I'll pay you $1,000 right now. Just do that." And so I did.
Just out of the kindness of your heart, you're like, let me just give you 1,000, or what was?
Yeah, that one was already off my credit report by that point. But I said, oh, you know what? I have the money. But I wasn't going to pay him 30 grand. I just said, you know what? I know you want something's better than nothing, because that's really what you have claim to at this point. Right. So here, I'll pay you something. So yeah, I negotiated. I paid down. A lot of it was earning more money to help pay down several $100,000 of that. I mean, so it wasn't like I negotiated everything down to nothing. I mean, I still easily out of pocket was coming out of easily over $500,000, total with everything, even after.
Because sorry, that's amazing. Because when I hear that, I'm like, man, so you had to get 1.1 or $1 million on top of whatever your earnings were, like to survive and pay the house. But you're saying you were able to learn from reading Donald Trump's book and probably from other people how to get that down to around $500,000.
Yeah, exactly.
That must feel good, at least, like, hey, knowing you use that skill set to be able to negotiate.
For sure. Yeah. I mean, definitely that helped. I mean, it wasn't easy. I mean, I'll tell you, the mental game was the harder part than even the financial game. Financial game, there's some strategy there, but it's not that hard to do. It's the emotions, right? I mean, especially because at the time I felt like a complete loser because, after during the last recession, I was actually teaching people how to get out of the rat race, only to find myself back in it.
Yeah.
Give you a little bit more background. I actually started out as a financial advisor. That's why I'm the anti-financial advisor now.
That's right. Yeah, that's right.
So I started out that way back over 20 years ago, and I was a financial advisor for 4 years. And during that time, I remember my dad, finally, the guy who taught me how to save, spend nothing, he's like Dave Ramsey's older brother, like the guy that Dave Ramsey looked up to, right? He was so proud. He paid off his house early. He did everything right. He was saving his 401ks and everything. And then when I sat down with him, he was 61 years old. He said, all right, Chris, I want to retire hopefully in the next few years. Tell me, what can I do here? And I'm looking at the situation. I said, Dad, if I'm to be honest, if it weren't for Social Security, you better hope you die in 5 years, because you only have enough money to last you 5 years. Even though you're debt free and you've been saving your 401ks, it's not enough, because the market had just beat his butt in Y2K, right? And the turn of the millennium, So when he had that, even though it was recovering and he made some of that money back, that's the thing. The market is just retarded. It really is. It's bipolar. It's like that crazy
When you say market, are you assuming the stock? Are you talking about the stock market?
Yeah.
Okay.
That's the typical stock market, because every financial advisor tells you, really, they're not financial experts. Financial advisors are just telling you to invest in the same old crap, the same old mutual funds, IRAs, 401ks, Roth IRAs, annuities. It's always the same junk, right? It's always the same thing. They just try to package it, make it look sexy. But the truth is, you're put into this mediocre market that literally the S&P 500 has only averaged about 7.75% for the last 30 years as a real rate of return, not the average that everybody talks about that's like 10 to 12%.
Right.
It's like 7.75. So you take all these high risks, you get mediocre returns. It's just never enough. And see, when I saw my dad's situation, I realized, crap, if he didn't make it, what hope is there for almost anybody? And I looked at my own clients that have been with advisors for decades that I inherited later on, because the advisors either quit or retired.
Yeah.
And I'm looking at those people. I'm like, well, none of them are financially free. Not even the retired doctors. They're still worried about running out of money. And then I looked at the financial advisors. And if you strip away all the money they make with the assets under management, which are really just commissions, right? You strip that away, they were broke too. There was guys I knew that were working there since the 1970s that were still working their tail off as old men, because they could not fully retire.
You're blowing my mind right now.
So why, if it hadn't worked for them, why would it work for me or anybody else? So that's why I was like, I got to quit. I got to get out of this thing, because I can keep teaching it, put blinders on like many of the financial advisors that were friends of mine were doing, or I do something else. And when the student's ready, the teacher appears. That's when one of my friends who is a real estate investor said, yeah, you need to get out of that industry. Here's the light, right? Here's actually what Robert Kiyosaki's talking about. This is what Rich Dad Poor Dad actually does. And started to get more in the real estate space. And that's what, kind of got me out, and so that's kind of who made me who I am today.
So let me ask you this. So when you lost, you said in 2008, you lost pretty much everything. Were you a financial advisor at that time, or were you already in the game of what you're doing now, where you're showing people how to
I was in the game at that point. So 2006 was about the beginning of 2006, when I quit being a financial advisor. Later that year, I was able to be financially independent, where I only needed like $3,500 a month to live. So it wasn't hard to get out of the rat race back then.
Right.
Where when I had to do it the second time, I had to have over 10,000 a month coming in with 8 kids. Right. So
it's a bigger, larger feat. Yeah. Larger feat right there. So the same thing that got you financially independent in 2008, what's the difference? Have you done things now that like would shield you from something like that happening again?
Yeah. The difference was this is, the funny thing is, the thing that got me out of the rat race in 2006, I stopped doing in 2007, because, you get it. We got wholesalers on here, right? Like, it's awesome that you can take a very little money and make a lot of money. And in fact, there's even I was just realizing today, I never called it wholesaling, but I actually did some like under the table wholesale type deals with friends and family. Just didn't charge them a fee, but I essentially kind of helped them do it. And maybe a few cases I might've said, hey, pay me $1,000 for helping.
Yeah, give me a finder's fee or something. Yeah.
Yeah. Like a finder's fee. Exactly. I was just like headhunting in a sense and matching them up with investors. But I was doing that kind of stuff, but I wanted to go into flipping, because you're making $300 a door a month. And I wasn't even making that, by the way, because, there's some of these properties I was cashing out all the equity, and I started becoming negative cash flow on some of those properties. Right.
Yeah.
Right. It was appreciating, just like we saw in 2021. We're seeing all this appreciation. I'm like, strip the equity out, reinvest, just keep burning that cash flow through. And so I was doing that stuff, but I was going more for the home runs. I was like, well, if I can flip and make 50 or 100 grand, why not do that? And so it's kind of like go big, go home mentality. I went more of a gambler's mentality versus a cash flow passive income mentality. And that's what got me in trouble with other things, other elements that happened in that recession too, especially with starting a new business. The difference now is one, I'm a horrible active investor. I'm not a good property manager. I realized I'm a pushover. Like if somebody gives me a good sob story, I'm like, well, I need the money, but all right, one more month. Like that's what got me in problems with some of the properties I had before. So nowadays I buy like turnkey properties where I don't property manage. Like I'll just buy turnkeys, long-term rentals, have somebody else do all the management. I get paid the profits, right?
What do you usually do? Like 10% property management fee for them to do the whole thing?
It depends. I mean, some of them are as low as 6 or 8%. Most of them are usually about 8% on average, I would say,
Okay,
8 or 9.
cool.
So yeah, pay them for that, and and then just collect the profits off of it. So I don't have to do anything other than buy it, and then they manage it all. I don't even know my renters' names anymore. It's all
It's a
done
nice
for
place to
me.
be, right? It's
It
a nice
is,
place
yeah.
to
It's
be
more
not
fun that
knowing
way.
who your renters are. Well,
Yeah, and even
are
when
you
even when there's bad stuff, I mean, even like syndications, buying with other partners into multifamily, let somebody else operate and manage that. Then you have to worry more about who you're investing with versus just what you're investing in. But
for
doing
sure.
multifamily syndications, I do oil. There's like an oil syndication where you're leasing the land to the oil companies, and you make money off of that, and you make money from the profits of the drilling.
Okay.
There's
Wow.
all kinds of ways you can make money in the passive space.
That's amazing. Okay. So, when you do, let's see, the multifamily or the properties that you have, is it mainly Utah? Because I know we both live here. Or are you trying to do it in other states or other
Usually
areas?
other areas, like I'm doing nothing in the western half of the US because things are
It's
really
hard to
high priced, low rent,
hard hard to
ratios.
cash flow, right?
Yeah. So I look more like the Midwest to Southeast. Like I've got properties like in North Carolina, Birmingham, like Alabama, Memphis, Tennessee, places like that. Even lately I've seen Arkansas is actually going to be a decent market, depending on the market and what kind of properties you're finding. So
Mhm.
yeah, there's definitely opportunities, but most of them are all out east from where I am.
And they're turnkey, you're saying? You're not
They're
really messing with
turnkey.
distressed
Yep.
properties? Hmm.
Exactly. So yeah, we're just buying properties. Sometimes they're new construction. There's been more new construction lately than just old renovation projects. But usually, if you get some renovated projects, you can sometimes get a better cash on cash return.
Yeah.
My baseline of what I would like to get is at least a 10% cash on cash on that
Okay.
kind of property.
That's pretty good cash on cash, right?
Oh yeah, yeah.
10%. Yeah,
Especially
that's
now.
great. Yeah. So tell me, are you finding these properties through wholesalers that are bringing you deals? Are you MLS mostly getting them from on the market on the MLS? Where are you getting these?
Usually from turnkey companies that either have relationships with wholesalers or they're actually just renovating them and doing them themselves. I know I'm in another real estate mastermind group where that guy he's a wholesaler and a flipper too, but he
Mhm.
also buys some properties saying, hey, I'm going to renovate this project, and then flip it, sell it to the investors. So he just does this fix and flips. He flips it and then property manages it on the back end. So he sells it away, then he's making the money on the property management. So he's almost kind of double dipping in his
Yeah.
case.
That's a good strategy. If you can
Yeah.
find them, flip them, and then property manage them, right?
Yeah. Yeah, exactly.
So are you getting traditional financing on these? Because I think you can only have up to a limit of 10. So are you trying to get some on seller finance? Are you trying to get some creative financing on these? How does that
No,
work?
usually we can do pretty well. Even if you go outside FHA guidelines, there's other lending you can do as well. And they might have a higher rate, might not.
Mhm.
Lately though, I haven't run into that situation because the turnkeys that some of the ones that have been the best actually are
Mhm.
you can buy in cash outright. So
Oh,
they're actually
yeah.
better even without financing, especially with the way the rates have gone up. So it
Okay.
just depends on the project. But yeah, I haven't really
'Cause
run
those
into that situation too often. Even if you did, there's always portfolio loans you can do where you can roll them all together into one package. You can do that
Yeah.
too.
Have you seen that the builders are a little more motivated to get rid of their properties to sell at a discount? Because 'Cause they're like, "I got all these
Definitely.
houses, I need to get rid of them."
Definitely. Yeah. Just in the last really 3 to 6 months. I mean, it went from like, major seller's market, you couldn't negotiate anything as a buyer to all of a sudden now, I mean, it's almost standard for a builder. And I've even seen this with non-builders as well. You can
Mhm.
ask them to put more money down on the closing costs to help buy down your rate by buying it
Right.
down 2%, for example. So yeah, there's a lot more flexibility now than there were, especially because people don't want to buy. Now they're actually I guess you could say they got a little slice of humble pie, and so now they're willing to work with you a little bit more to give you some better
Yes.
deal and better
It's
numbers.
it is nicer. I mean, calling real estate agents and trying to negotiate a deal over the last few years has been painful, but now they're like, "Just make an offer," and you're like, "All right, now
Mhm.
I got the power." I love it. So
Much
let me
easier.
ask you this. for a person like me who has taken Dave Ramsey advice to a certain extent, and I have most of my money in raw IRAs. I have most of my money in stocks. I have a couple rentals, but then it's just like I haven't really gone too deep into that because as a wholesaler, I haven't really kept as many assets. I've had to run a wholesaling company where you really can't keep that much because you're churning and burning, right? You got to keep everyone paid. And I tell people wholesaling is not the best business model. I think it's a good way, a good strategy to learn. I think it's good to have that as an extra strategy. But if your goal is to only wholesale, it's a mistake. You need to be able to do everything. And so for someone in my position where it's like, hey, I'm starting to come up and I guess level up, what should I do with this money?
It depends on what you want to do with it. I guess is really the key.
I want the passive life like you. You're the passive man.
That's right. I think in general, some of that money, even some of your profits, if you can get some profits from your company, rather than putting everything back into the business, take profit. That's why I recommend one of the shows I was on was actually Profit First for real estate investors, right?
And I love that. I got to tell you something about that, but keep going.
Yeah, Profit First is awesome. I mean, be able to try to take money home, take some of the profits actually home versus always putting it back in the business. Because if you're always quote unquote reinvesting into your business, what you're really saying is, I'm spending money in my business, right? I'm not profitable. Like I'm reinvesting my money in my business right now in this year. And I've done a lot of aggressive stuff to build the YouTube channels and things like that. But that being said, that's a temporary situation. That's not a permanent habit. Some people get in the habit of always reinvesting, which just means they don't take home money. And so I think it's for a personal standpoint, and this is true with anything, wholesaling is awesome. If you want to build, you can build a multi-million-dollar business in wholesaling, right? You can build a massive business, make lots of money. The key is though, if you want to create real wealth, you got to get outside of that business model and get into something that does have more assets, where you're building a legacy, right? You're building an actual wealth in your portfolio. So your personal portfolio grows, not just your business. And that's, I think, the number one mistake I see with beginning wholesalers, especially.
I was there.
Ones see it.
I totally know. I was there. I mean, it's the most active income. It's not passive at all. Wholesaling is not passive at all. It's the opposite of passive. You got to be on that phone negotiating. Next deal, you close one, got to get the next one. But if you can start to learn how to keep the good ones, right? That's the goal. I think that's why everyone tried to get into it, because they're like, oh, I can start a business that I can cherry pick. It's like, well, hey, you got to do this the right way, because you ain't cherry picking anything if your marketing expenses are like $20K a month and you got employees, right?
Yeah.
So about Profit First, this is really exciting. So I finally went to North One. I don't know if you've heard of North One. It's a website that, like, I think it's a software service that it banks through Bancorp. So I just opened this up, and now when I get a deposit into my North One account, it automatically puts it into envelopes, Profit First envelopes. So it's got like 45% operating expenses, 35% owner pay. So I just did it, and I just started transferring all my money over there from Wells Fargo, because Wells Fargo stinks. That they make me have a balance on everything. And so anyway, I'm switching all my money, and it's starting to hit the North One account. It feels so good to have it hit all those different envelopes automatically. And I'm like, whew, now I can really see where everything's going. So I get super excited that I'm doing the Profit First thing too. So it's exciting.
Yeah, that's so important to understand, is that kind of discipline and really ensuring that you do get paid. Like it's good to build it, even if it's 1% profit you put into that little bucket, that account, right? Great, do it. Start there and then build up if you have to. But having those kind of habits right up front, really track your money. Another thing I'm about to go to a mastermind with a bunch of wholesalers here pretty soon, and across the board, even the experienced ones are all feeling some sort of stress from the changing of the markets, right?
Yeah.
So some of them, the ones that definitely are weathering the storm the best are the ones that learn from previous, recessions and things like I did. The things I learned from getting my butt kicked is having cash reserves, and
for sure.
And now I'll tell you this. I mean, one, that's why you want to have profit going to different buckets, but that's why I keep my money. Like my wife saying, hey, we got to have at least $250,000. You don't touch, Chris. You can't have it. You can't touch this. Like Hammer says, right? You can't put your hands on this. Like this is just for us and our family alone, not including my business, my business expense account that I have for operating in case things go under or something crazy happens.
Separate. Yeah. Cool.
Yeah. Totally separate. So I have business savings and I've got personal savings. And someone might say, oh, but Chris, like, you could be making an extra 30, 40, 50 grand a year off that cash, just sitting there doing nothing, right? When someone thinks only offense and not defense. And they're right. It's true. I could be doing that and generate more cash flow from that. But what I do is I keep a good chunk of that money. Like I keep it in higher yielding accounts. So I have like a higher yielding savings account. And yeah, there's one I got like online with like 3% a year. It's not great, but at least it pays a little interest.
It does the work. It does
the work.
It gets it done. Yeah.
Yeah. But I keep the bulk of my money actually inside my life insurance, my whole life insurance type of accounts, that cash savings account that's tax free, earning like 5 to 6% a year. So I'll do that where if I know it's going to have to sit around, and that's the thing I told my wife, I said, I'm not keeping this in the bank earning literally 0.05% in my credit union. I'm not going to do that. So I said, here, let's earmark of our 200,000 I keep in my life insurance. The other 50,000, great, we'll keep in the local bank. We have to go grab it today or whatever it might be. Right. But now at least I'm earning at least another $10,000 a year more than if I just let it sit in the bank. And so I use that whole infinite banking strategy, not just for investing, but I also use it just for holding my cash and being liquid, especially at times just like this, where I tell you, like, this is the most exciting time right now. Like recessions like this that we're I think we're already in, even though they say we're not in it right now because we got out with that great one quarter that would just have to be positive. Trust me, we're still in a recession right now. Wealth is built during recessions, right? You can make good money from up markets, right? You can make money in those markets, but true, real big wealth is made during a recession. If you're cash liquid, if you have money available, not just to weather a storm, but for opportunities that people can't afford to do, that's the best time to do it and make a killing right now. So that's, if I were to give any advice, is have liquid cash available.
Man, you're getting me pumped right now. Just thinking about it.
I'm totally pumped. Every time I hear more news that people start getting despair, I'm like, great. Like, I feel horrible for the average American, of course, because I've been there. Like, obviously, I've been broker than broke. Like
you've been broker
than a homeless guy.
Yeah, you lost more money than most people will ever have.
Yeah, yeah. So I get it. Like, I've been on welfare. I've been through hard times, but I don't wish pain on anybody. But I do recognize when there's opportunity. It's opportunity to, one, be more cautious and aware. That's one thing you have to be careful of, is not just have dollar signs in your eyes and you gamble too much. But it is a great opportunity that if you have the cash, you have the means, you can create a lot more wealth, do some amazing things. And real estate's usually the best place to do it in.
I love that. So I know the infinite baking, I've talked to some people about it. I'm assuming those strategies, like you have to have money in order to utilize that stuff. You can't be rocking around with like a couple thousand in your bank account and it'd be worth it, right?
Right. Yeah. If you only got a couple thousand in your bank account, just buy a cheap term and then you can convert later when you're in a better position. But if you got at least 5,000-10,000 a year, you're trying to put away to save or to invest even, then you've got some options for sure. And I see that a lot with real estate investors. Most of them will look at it as, one, to stay cash liquid, especially if they want to get lending opportunities. It's always nice to be able to, I can just show my statement of my life insurance. I don't have to show a bank statement. I just say, here's my life insurance. And they say, great, check, cash reserves done. And now what's your credit like? What's your debt to income ratios? And then they can check those off the list, right?
I love it.
But the other thing is too, is that I can use that money in my business or even with my investments to double dip, to get my money to pay me twice. Because
and tax
the cool
free,
thing
right?
is, what's that?
It's tax free too, right? To use the infinite banking money?
It is. It's tax free. Now, it's not like a Roth IRA where you invest with a Roth, right? It's not like that. It's literally like a tax free savings account that you can pull money from. But the strategy that confuses people a lot, especially in the real estate space, is, wait, I have to borrow my own money? I have to pay for my own money? Quick answer is no. One, you don't. You can actually just withdraw cash. But the reason that investors don't do that, the reason why most people will get a line of credit against it, whether it be with the bank or the life insurance company, and just so you know, that line of credit does not have a monthly payment affixed to it. So you can pay it back however, whenever you want, as long as you pay it back by your death, which is what they just use when they pay your death benefit. They just take the loan amount out that you borrowed, pay the rest of your family tax free, right?
Right.
But you have that flexibility. So if you're even doing a flip and maybe that project takes 6 to 9 months, great. Rather than having to pay on a line of credit where you have to pay monthly to the bank, you don't have to do that here. Like, you can actually just let the interest accrue, just like you would like a student loan and deferral, and then pay it back later if you want. You don't even have to. That's the cool thing. The reason that banks do that, or why insurance companies are willing to do that, is because at minimum, they will pay you at least 3% a year, tax-free. That's the worst case scenario. If they don't even pay you a dividend, that's just their guaranteed bottom line. A lot of the companies I've used, they've been paying for at least the last 175 years straight, more than that minimum. So
wow.
So that's why I'm saying, even in the low interest rate environment now, they're like 5, almost 6% currently.
if I understand your strategy really quick, so it's forget the stock market. If you have money, you want to invest it in passive income that comes from real estate, but also
Yeah.
use infinite banking as your strategy as well, but not
Yeah.
not really dabble in the 401ks or the
Definitely not.
stock
No,
market.
those, especially if you want to have any financial freedom before you're 60,000 years old, right? I mean, think about it. I mean, the 401k,
Right.
they make you keep it there till you're 59 and a half. Like they lock it up. I mean, not to mention there's no tax benefit to a 401k. And if you're a real estate investor, I mean, if you're going to be a real
Yeah.
estate professional and investor, right? I mean,
Mhm.
you get all these tax write-offs from being able to depreciate properties and everything else. You don't even want the 401k because that's the worst tax rate you can be in. Like we all know, if you read Rich Dad Poor Dad, the worst tax you can have is ordinary income tax. Well,
That's
guess how
crazy.
you're taxed with the 401k? When you pull it out, yeah, they give you the deduction, but all they're doing is
Mhm.
just deferring your tax to a later date, which is probably when you have the least tax benefits. So I
Wow.
really get hit with the taxes now, so I don't have to get taxed at all or later or very little because I can use that real estate professional status to offset those taxes. You know, like one of my friends, he's a syndicator, right? He buys a lot of multifamily projects and whatnot. I mean, he
Mhm.
made almost $1 million last year, just personally, but he claimed 25,000 on his taxes because of all his write-offs, all the depreciation, everything else. Well, he's
Wow.
also dumping 300,000 a year into his life insurance plan to use that to invest because he knows that he can borrow from it, be able to invest in that project, right? Take the cash flow from that project, put it back in to pay down that line of credit with the life insurance. And what happens is he makes way more interest than what he's paying in interest. It's the same thing the bank does to you, right? When you put money in
Wow.
a savings account earning point nothing percent, they're going to loan it out at a 6%, 7% mortgage or car loan, right? Or even a
Of course. Right.
20% credit card. They're literally making bank off of you. You're just doing the same thing. You're just turning the table saying, wait, I want to pay less interest to them and make more off of them in return. That's what you do with the life insurance. You make more in dividends than you pay in the interest to them. So you make a spread, you make a yield on that,
Wow.
and you can still invest it. You can still make cash flow with it. So it's a way to double dip. And if you're a business owner, which obviously you are if you're wholesaling, right? If
Mhm.
you use it for business purposes, the interest that you are paying, guess what? You write that off on your taxes anyways. So not only are you making more in interest than what you're paying, but you're writing it off too. So you're actually making like a triple dip, as I call it, as a business owner.
Wow, man, you're blowing my mind here. I think we might need to talk after after the podcast. That's so
That's a whole
cool,
nother
man.
podcast by itself, right?
I love it. Yeah, and I know you gotta go, right? You gotta stop in a
Mhm.
little bit, but I think this is amazing because most of the financial advisors that most people hear about are Dave Ramsey and the deal guys, or I don't know. You go on YouTube and it's very safe advice. Not safe
Mhm.
advice. You just feel like it's safe because it's so simple. It's like, oh, just put your money here and don't touch it for 50 years and you're good.
Uh-huh.
And it's like, oh, that sounds easy. And it sounds like your strategy is simple as well. You just need to know how to navigate it. And it's better because of the benefits of the dividends. And I mean, it sounds like you're just doing what the bank's doing to you from what I've heard. You're just
Yeah.
using it in your favor.
Exactly. Yeah. I mean, I'm using something that is guaranteed and it's different than what most traditional people will talk about, right?
Mhm.
But I'm also investing in real estate. Like I'm investing in the thing that those financial advisors will tell you never to put money in. Why? Because they don't make a dime in commissions if you put your money in real estate. They're going to tell you all the time, put your money in their crap, which has
Yeah.
been proven not to work. I've already seen it. I already saw with everybody's lives, they weren't becoming financially free, going with that traditional, I call it comfortable saver advice, not conservative
Right.
investor advice. Like they always say, I'm a
Right.
conservative investor. You're a comfortable saver because the masses are doing it, but the
You
masses are
feel
broke. Why follow the masses? Do what's been proven to work, which there are already literally millions of us that have done real estate investing, made millions of dollars doing it. Why not
right.
go with something that's proven versus something that hasn't been working yet?
So how do you help someone like me or that's been taking the old advice? Like how do you if I gave you, let's just say I gave you 500,000 or let's get 100,000,
Mhm.
whatever. I say, all right, do what you got to do. It's yours. Is that what you do? Do you just take people's money and get this all set up, or do you teach people how to do it? Like, how does that even work?
We're more on the teaching side and consulting. So we actually, rather than taking your money and investing it for you, that's kind of risky in my opinion. Is a
Mhm.
lot of responsibility there, but more teaching you how to invest it, like where are the best options for you. And then we actually have a whole Rolodex of a network of people that we've vetted over the years, primarily people that have actually been through full market cycles, right? Like if you're looking to put money into a multifamily project, you better be with a guy that maybe has been doing this for the last 15, 20 years versus someone who just showed up in 2018 and said, oh, I made money on a couple of deals. I've done 2 projects so far. And somehow you're going to trust him with your money.
Right,
That's
right.
that's
That makes sense.
risky. So it's like go for the people that actually have been there, done that, still doing it today. And you can put your money there, or you can buy turnkeys or whatever you do. We can help you strategize to figure out where would be the best places based on what you want, whether it's growth, cash flow, or both.
Man, I love it. So where can they find you, Chris? Where can they find you if they're interested in the strategies that you teach to really teach passive and financial freedom?
Yeah, easy place. Go to moneyripples.com. That's money ripples, not nipples. I had a few people ask about that one. That's not the case. Okay. We're not in that kind of business. Money ripples.
Oh gosh.
Yeah, moneyripples.com. You can go there, or we also have the Money Ripples YouTube channel where we got podcasts and short videos on these kind of subjects too.
I love it. I love it. Well, everyone check out Money, as he said, Ripples, moneyripples.com. And that's funny. But no, I think this is amazing because when you come from a background like me, where I didn't, I didn't always have a ton of money, right? I'm not saying I have a ton of money, but I'm just saying you don't really know what to do with it, right? So you start going on YouTube, just like as your new wholesaler, you're like, I don't know what to do. Let me learn. So it sounds like you provide a great product that helps people really know how to invest their money. And that's super valuable.
Absolutely.
Cool. Well, let's keep chatting. I think me and you can have a call later, but this has been the Payneless Wholesaling Podcast, showing people how to get into real estate investing the painless way. All right, Chris, I appreciate your time.
Thanks so much.
Peace out.